21st of October. Great to have you with us. Ash, of course, with me. G'day, buddy.
How you doing, mate? You all right?
I'm okay. Just getting all of this button pressing out of the way, and then we'll be underway. I've just got to send us live around the world in social media land.
I don't know
And
whether
yeah,
just if my internet cuts out, then let me know. I've got a few problems here, but when you're speaking, it's coming back through really fast. So I don't know if it's your end or my end, but we'll
ooh,
see.
okay. Should I slow down?
That's brilliant.
That works, does it?
Oh,
Is that
sorry,
right?
mate. Got a trade already on the footsie.
Right up. Where you go?
So we are going along. You going to put this on for me?
Yeah, yeah.
Okay. So buy at market, 10 pip stop, 5 pip profit.
Right now,
Yep,
buying or selling?
buying.
Okay, we're in.
We see the screen.
Uh, your screen, my screen.
Your screen. If you got the trade on, should we have a look at your screen
What
or
what can you see at the
I
moment?
can't just you at the minute.
Oh, lucky you. Right, try that.
Brilliant. Okay, so we're in the UK 100. It's bought it. Have you bought a market?
It said buy at market, but no, it hasn't. Yeah, we're in. I think my
Okay,
screen's frozen for some reason.
that's a
I'm not getting
massive
any
spread.
data
That's like
through.
a 6 pip. That's a 7 pip spread, is it? Oh no,
Where are you
sorry, no,
seeing?
I can see it. I can see it. Sorry, I can't. The buy I can see very faintly. The line is just very faint. That's okay. I can see that red line is the take profit, isn't it? Got it. Got it.
But I can't see any data coming through, which is really, really ordinary. Oh, there it is. Okay, here we go.
There we go. Okay, so a long FTSE 100. We've got a 10 pip stop and we've got a 5 pip profit. So we're aiming for
There's the profit
uh
line.
there's a profit level. Cool.
Can't see the stop line, but there's the profit line.
Actually, I can explain this trade if you like. It might make it now we know that the trade's on. I will explain the trade. So I'll grab screen unless you're about to do something.
No, I haven't got a trade, mate. It's all good.
Okay. All right. Cool. All right. In that case, let's take the screen.
While you're doing that,
And
those of you joining us for the first time, we are trading 1 minute charts, and Ash is trading the FTSE and the DAX. I'm trading gold and pound versus the dollar, both versus the dollar. That is. Sorry, mate. Go.
no problem at all. Okay. I'm just going to change this to white foreground. Okay. So all all that was traded here was a break of the level. So if we kind of bring this down to this, you can see this is the trend line here. It's just snuck under the level, but you can see that we got a break and a retest. So it's just simple sort of price action trading. Now, price you got in it was 64, wasn't it? So it's about there. Must be 66 you probably got, did you?
It's one thing this doesn't tell me. It doesn't tell me
Oh,
where I
okay.
actually get. It doesn't give me the level. I
If you
can
look on your
probably
terminal,
tell.
does it tell you on the terminal window?
That's a good idea. View terminal. It does, and it tells me that we in at 83.60. Oh no, that's the current price. No, 83.66.
83.66 with a take profit 83.61. So the stop's going to be at 83.56. It's down here. So if this holds, this is looking pretty good because you've got an inverted head and shoulders here as well. The break back through the trend line isn't particularly positive, but still, it's a break and a retest, and that's really what I'm looking for. I'm looking for a pattern to break through. There we go. Let's see. The market's just opened up, so let's see if we can get our profit. So we're looking at this area here for our profit area. Anything down this point is going to be a loss, but we will see. So looking for a pattern. This is quite a nice one because it's a nice retracement to the downside. So looking for a break of that retracement, and we'll try and note these down so they are they are notable patterns. Because I'm trading the pattern rather than the bar, which I think is pretty sensible with a 1 minute chart, but things can change, so we'll see. So let's see, we got about another. We're looking at 2 more pips if we can get this up here to our profit level here. 2 more pips, and we will have our first winner of the day. And Jeff and I are going to log these, and over time we'll see whether we've actually got a decent scalping strategy or not. There we go. Did we get it? I don't think we got it, did we?
No, not quite. Not quite.
Didn't get it quite. Okay, should be there.
Push. It should be, but it's not.
Okay.
Very close. There you go. Done.
There we go. So we got our profits. So first winner of the day, and it's just a half percent to 1. So obviously with these, you've got to win more than 75% really to give us a decent trading strategy. And it could go miles and miles and miles, but that's not really what we're testing at the minute. No. We will test the levels and how far these do tend to go, but ultimately what we're trying to do is getting a high winning percentage. So there we go, mate. We are 1 up on the day at least.
Good job. I don't have anything at the moment. I'm looking for both the gold versus the dollar and pound versus the dollar, as I said before. Neither of which are setting up. I'll explain, if you like, briefly what I'm looking for.
Yeah, that'd be great, mate. All right, I'll give you the
screen.
So
that you guys can look for it as well. I don't think I'll go the whole hog and say exactly what I'm using, because you guys might have your own methods of doing that, and that's perfectly fine. When I say your own methods of doing that, you might be looking for different resistance and support levels to what I'm looking for. I'm really looking for on gold. Let's start with gold. There we go. Actually, I'll put both charts up there for you. Gold, and what's that? That's you. Bye you. We've already had a winner there. Okay, so I'm really looking for something that's overbought or oversold. And then I'm looking for confirmation of that. Let's talk gold at the moment. And gold is heading towards an overbought scenario, but not quite there yet. How do I judge that? Well, I'm using Bollinger Bands. You could be using a horizontal level. You could be using a trend line. You could be using pivots. You could be using candle patterns, whatever you deem to be appropriate for your support or resistance. As I said, I'm using Bollinger Bands. I'll give you a brief description of that. You haven't got any trades at the moment, Ash.
No, we're all good, mate.
Okay, let me show you guys what I'm doing. I don't think it'll hurt to do that in this forum. We might save it for later down the track, but at the moment, I think it's perfectly okay. So I've got indicators. I go Bollinger Bands. I'm using the 20 period Bollinger Band. I'm using a deviation or standard deviation of 2, and that's okay. That's my first Bollinger Band. My second Bollinger Band on the same chart, so you go again, is exactly the same, 20 period, but this time a 3 standard deviation. So you change your deviation to 3. You might want to change the color of that. Doesn't really matter. I know what they look like. Let's go with red, because red is what I'm suggesting is overbought or oversold. So once it hits this red, which it has now done, I'm looking for confirmation that price is going to bounce off here. So if this closes on the 3 standard deviation Bollinger Band, I'll be looking for a candle then to close above the 2 standard deviation Bollinger Band. We shouldn't have to wait too long to see that. Once that happens, and this is where I got the system from, there is a buy immediately above that bar or candle, if you like, the one that closes above the 2 standard deviations. I don't do that. I wait for the second candle to close above the 2 standard deviations. So we're in that zone right now. And if that were to close here, then that would be number 1 closing above the 2 standard deviation. I won't be trading that. I'll be looking for the second one to do that. If this low is taken out before the second close above the 2 standard deviation, no trade. That then becomes the first. Okay, so it's got to be a low. There has to be a low first. This one looks like it's going to close above, and that would be where I got the system from. They would trade above that bar, but I want confirmation, being the conservative person that I am. Rightio, very, very close to a close, and there it is. So that is number 1 close above the 2 standard deviation. Again, if this candle closes above, I will trade it unless it dips below the low. So I'll set that up. We'll just use our 1%. It will be an entry shift of 1. It'll be a stop loss, a stop loss shift of 3. So my stop loss will be below this bar. I don't want to take profit there. I want to take profit at 2 to 1. So I'm going a little bit more robust, but I will take a first profit at 0.75 to 1, at which time I'll close half and move my stop loss to entry. Don't want any of that afterwards. Okay, so I'm going to have to be quick here. There it is. So it has closed above. So I'm buying here. Stop loss here. It's using, actually, unfortunately, I'll have to get this tweaked because it's actually using a system of entry here that is way above or way beyond the 1 minute charts. So really what's happening is I've got an entry, I think it's probably 1 pip above the high, and a stop loss 1 pip below. It's really not what I want. I want to get in as soon as that breaks. So I should be in now, and I'm not.
Yeah.
But that's a setting for this. We're really just trying to work this out, guys. The setting needs to change for this to be automatic. So you could be rest assured that I'd be in here under normal circumstances, but I'm using the CA, which is not set for 1 minute charts. It's as simple as that.
You can't do it by market. I suppose that's not using the EA then, is it? But you could do it by market, I suppose.
I'm not fast enough.
Okay.
I can do it on yours, but I can't do it on mine because I'm trading the live candle.
Right.
You've already got your level set. I don't.
Oh, I see what you mean. Yeah. I see what you mean. Yeah, so because you're doing it in pips.
Could have closed up here.
Yeah.
Or it could have closed down here, or even down here, and I wouldn't be trading it.
Yeah, understood.
So yes, once we've got the system down pat. G'day, Lewis. How are you, mate? Once we've got the system down pat, we'll approach the programmer of the EA and say, "Here's what we need."
Yeah.
And being the wonderful person that he is, he'll
do it for us,
I'm sure.
Yeah. So just on a side issue as well, mate. I've got another trade as well that is not a 1 minute trade. It's just it's actually a longer term time frame trade, which I'm happy to sort of talk about as well. And it's off the back of. Go on, mate. Sorry.
No, you go for it.
Yeah, it's just off the back of kind of seasonality and COT data. So This is the trade I'm looking at. It's the Kiwi Swiss short, and I've set a limit order here at 91.11. And the reason I've set the limit order there is that this is the kind of trend line that I'm kind of looking at, and it kind of will run into this area. So I'm really looking for a push back to the highs, find this resistance, and then come down. Now, the reason that I'm doing it that way is that when I looked at the seasonality, sort of like, you know, how I would use seasonality. What I noticed was that that the seasonality kind of works out throughout the week, but it won't necessarily give us the full week of the signal. So the signal suggests that we will get weakness in a currency pair this week. That's what it's saying, that a currency pair. And I'm gonna just bring it back to the Aussie yen. So the Aussie yen last week, if we look at this on the weekly bar, there is mind you, the Aussie yen. I mean, it's not the best. It's not the best example, but let's use it just for the purposes of this, because it's not too bad. So here we get a doji. I mean, it is red. So if you were to sell this now, it was an Aussie yen short last week. So we're looking at last week's bar here. We blowed it up a little bit. So we're looking at last week's bar. Now it was an Aussie yen short on the seasonals, but it didn't really go anywhere. But if you then sort of like mine in and sort of like, so you know that you're looking for a short, and we know that we're looking from, you know, effectively the last 5 days. So 1, 2, 3, 4, 5, these ones here. If you were to find this resistance zone instead off the daily here, and it's not easy to find, to be fair, but if you sort of like put these in, and probably that as well, this would have given you near enough this kind of level. It came through a little bit, but we didn't really get too much of a high. Now, if we were to set our limit order here with a stop at the highs, then we actually get some, you know, we actually get a decent move to the downside. It's around about a 1.5, nearly a 2-to-1 trade if we sort of like manage to pitch it from this particular point right to the lows. But the point really sort of is that I'm not looking, when I'm looking at the seasonal sort of data, I'm not really looking for a push for the week. I'm looking for a push on the week, and for me to get a push on the week, really I need to try and pick the highest potential price and the lowest potential price, rather than the highest potential price, I should say, and just sort of like try and get a target that's better than 1-to-1, maybe sort of entering a 2-to-1, possibly even trailing on shorter term timeframes. But the entry is really actually quite important. Rather than just sort of like selling because it suggests that we should sell, because things are sort of changing in the market all the time. You know, the fundamental data is kind of driving the market one way or the other, but the seasonals do have a bearing. And I've really looked over the last couple of weeks, and this seems to be the best way to look for those trades. So that's the reason I'm going for Kiwi yen short, but I want the best possible price that I currently see on the chart. So just to explain that as well, mate. COT data this week. Now this week, incidentally, so the CAD is for a short, the Kiwi's for a short, the yen is for a long, and the dollar's for a long. So a long, and another possible one would be the CAD yen short as well. The tricky thing about the CAD yen is the COT data doesn't agree with it, but I wouldn't mind this one. You know, I actually quite like the pattern here. Moving up into this area, and I'll be interested to get your opinion on these currencies and what you're seeing off the indexes as well, mate. But looking to push into that area, we can see that there is a trend line here, which is holding this one up. So trading into that trend line or close to that trend line makes absolutely no sense at all. But with a seasonal bias for a short, we still could get a bullish week, but get a little push to the downside. So I'd be interested in selling the CAD yen here. But again, at level, not worried about price action, not worried about indicators. Definitely don't want to wait for an indicator to give me a sell signal. The seasonals are the sell signal, so now it's just about best possible price. So that's what I'd aim for, which is going to be around about 108.77 for a short on the CAD yen, and not look for a long push to the downside. Particularly, for two reasons really. But one is because the seasonals are only for this week. And even though the CAD does tend to be very weak for the month, in actual fact, so there might be some trailing stop loss thing you could do. But the other thing is that if you get the timing wrong of anything against the yen, you're going to get battered in swaps. So I'd
Yes,
prefer to maybe.
I'm currently suffering that fate.
Yeah, you just want to sort of trade it week on week, rather than anything else, because then it's going to need a big move, and they do happen, of course, against the yen. But I'm looking for a CAD yen short potentially. Kiwi yen short is better, even though the Kiwi isn't as weak as the CAD for seasonals. It is weaker when it comes down to the COT data. COT data is actually pretty bullish. Looking at this on the CAD, pretty bullish on the dollar, pretty bullish on the Swissy. It's pretty negative when you go to have a look at the Aussie. Pretty negative on the yen, but the reason that I don't mind it on the yen is that there's two things that I look at with the COT data, and one of those is the sort of how much selling is going on, and I've just seen a bit of a collapse in the Kiwi recently. Quite a big drop in the Kiwi contract. So that's the reason that I've kind of put it up there as a potential. I think the yen actually could do a pretty good job of having a decent week if right across the board if some of the fundamentals match up with it. So we're just waiting on that. But that's the trade for me this week, mate. I'm looking for a Kiwi yen short. And it's around about the 91.11 level.
Okay, cool. I've been toing and froing with the yen, and I've been euro yen short for the last 3 weeks, and that's the one that's punishing me at the moment from a swaps point of view.
Yeah.
But I found the indexes this week, which was a reflection of last week, of course. And you're me today, apparently, or I'm you, or whatever the case may be.
I switched that back.
Sorry about that.
You're just actions to wealth now.
There you go. I'm a happy fella. I'll show you what I mean by that. Most of them put in doji weeks, or what I call doji weeks. A lot of that is spinning tops, of course, not necessarily dojis per se. But if we go and have a look at those, we'll start with the dollar very, very quickly.
Have you got the chart, mate? My Zoom's just frozen up.
Yeah, I have now. Yeah.
Okay, cool.
So the dollar index is very, very difficult to say anything but bullish, right? Yes, there's the chance of a pullback, but maybe we've already had that on, I don't know what the days were, but probably Friday of last week where it's come off its high. I can't see it not getting to 104.46 area here. So I've got to continue to be bullish the dollar. The Australian dollar, speaking of these doji weeks, I'll call that close enough to a doji. So very, very indecisive. Do I see the potential for this to pull back to the trade line? 100% I do. And if I'm being super hyper technical, I'll say that this to me is a reversal bar, not to the upside, but not to the downside, but to the upside. So I'm on the fence with a lot of these, but the Aussie I think does have potential because it's closed within the top third of its bar. This is the Canadian dollar. Yeah, spinning top as it reached the bottom and going back to the top. Like you would expect, is this another higher low, or is this the higher low that we've been looking for, or are we going to retest the bottom of that range? I don't know. Can't answer that question. I think by the end of the week you will know the answer to that question because you've got a Canadian or Bank of Canada interest rate announcement on Thursday. So there may well be some toing and froing into that announcement, but coming out of that announcement is probably the best trade that you'll make this week. If obviously gives you a directional bias. But the Canadian dollar does look weak at the moment, I would have to say. Support is not too far away, however, nor is resistance. So, yeah, well, the interest rate announcement or the statement will make all the difference there, I should imagine. Pound, also, another one of those doji weeks, but it has landed firmly on that support level. So maybe a little bit of a bounce here, if not a continuation of the trend, which is very, very clear. High, low, high, 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 low, high, 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 low, high, high. Question mark. And that's the hard bit, I suppose. Is it going to bounce here, or is it going to put in a lower low? Good question. Swissy, I think, looks the weakest in terms of a candle pattern, but I'm not sure where that ends. And really, I think if I'm completely honest to my own self, that would be myself, then I'm saying there's the level there. So maybe a little bit more downside in the Swissy, but I expect the Swissy to fill this channel ultimately. So, long way to go. Kiwi, if you look at the Aussie candle of last week, which, as I said, closed nearer its high than its low, then this is the reverse of that. And we are underneath very, very similar trend line, as you might expect. Aussie and the Kiwi track each other fairly closely. So I'm expecting, read between the lines here. If the Aussie's closed on its high or near its high and the Kiwi's closed near its low, guess what I want to do? I want to buy Aussie Kiwi. Yen, another doji week, like was the theme of last week. Middle of this range, which of course is a descending channel. Bounce, perhaps. Yen buyers, Ash has given you that scenario. I'm more than happy to be on board with that because I'm Euro Yen short, but I've also got a position to hedge that Aussie Yen long, which is not triggered yet. The Euro looks to be in a strong support level to me. Did come off its low substantially, but certainly closed midway between the low and the high. So a little bit of a difficult one, the Euro. I know the numbers for the Euro are not particularly good. So I don't think I'd like to be buying the Euro at any stage. But I also see the potential for this to bounce a little bit as well. So I don't want to sell it either, apart from the fact that I'm already selling Euro versus the Yen.
Do you know, mate, it's interesting with the Euro because the fundamental data is pretty atrocious for the Euro and the Eurozone, but it doesn't seem to make any difference, So the Euro will just do its thing. I guess a lot of it is down to the fact that it is the kind of second currency, if you like, after the dollar. But it will just be it seems to confound fundamental data a lot of the time.
Doesn't it? It's so resilient to fundamentals. It's amazing.
Yeah, not a good one, not a good one at all. And it's interesting when you look at the kind of dynamics of currencies. And if you're a trend follower, if you're a trend trader, really you should only really look at things against the yen because they actually do trend. And if you look at a dollar yen chart. Yeah, and not even selling the. You don't want to buy the yen if you're a trend trader. Really you want to sort of try to get in positions like dollar yen as an example. If you look at a dollar yen chart on a weekly time frame, the trend is up. If you look at an Aussie Kiwi, I mean, if we're sort of like thinking about currencies and the sort of trader we are, let's bring in the dollar yen and have a look at it on a weekly, just so we can get a nice long-term time frame. I mean, look at that since 2021. Even if you go to a monthly, actually, mate. I mean, look at that. That is a primary uptrend. Now, there might be turning. That there might be a case to say that there could be a head and shoulders pattern starting to form now, and it might get a little bit more choppy. But generally speaking, that is up. Now, if you compare that to, I don't know, even something like, well, I mean, Aussie Kiwi is the obvious
dollar
one.
CAD, Aussie Kiwi,
Dollar CAD, yeah. let's have a look at the dollar CAD on the same time frame. Is that dollar Swiss?
That's dollar Swiss, but I've got to go there to get to.
Oh yeah, cool.
Otherwise, I'll open another chart. Dollar CAD won't be too far away. Where is it? There. By the way, I think that's my trade of the week. Aussie Swiss, dollar Swiss. When I say trade of the week, don't get into it now. I'd like to see a pullback, but I think that's, from my logical point of view, the two best strength versus weakness to me. Anyway,
cool.
That's dollar CAD.
Dollar CAD. Now, is that the same? Are we looking at the same time frames? Yeah, there you go. I mean,
we are now.
You look. I mean, if you look at the difference here, we've basically got one breakout from the low, and then it's just hit a range for the last 2 years. And even then, if you sort of like you're scrolling back, we were in this range or in and around this price back in, what's that, 20? I mean, it does have trends, but generally speaking, it's not a trending currency. It's a range bound currency, a range bound currency pair. So it's yeah. I mean, that's a really nice way to see it. Since 2014, this thing hasn't gone anywhere.
But look at that.
Oh, it's amazing, isn't it? I mean, it's up and it's down.
Well, if you want to talk ranges, you know, how wide do you want to go? This is a classic. I've been looking at this for a long time, this range.
Yeah.
Look at that.
Yeah.
And then you can narrow it down to here now. Classic ranging, which is good for me. I like dollar CAD.
Yeah.
Because you can trade it off the top and the bottom.
Yeah. But this is the thing, isn't it? When you're sort of like you're going through your list and looking for trending things and whatever else, actually, you could probably go and say, I'm not going to touch dollar CAD if I'm a trend trader. I'm not going to touch Kiwi yen if a Kiwi Swiss, if I'm Kiwi Aussie Kiwi if I'm a trend trader. I'm just going to look at the ones that actually do trend, and the dollar yen is a good one.
Is probably another one.
The euro pound is obviously another one. Yeah, another one. Euro Swiss is another one. Sort of these are really sort of like sticky little places. And if you are going to trend trade it, then really you want to kind of look at this and say, if I'm trend trading this, I'm going to be looking for shorts on a daily chart, because now I'm getting closer to the top end, because obviously you've got the wicks right at the highs, and it might get there. But if we go to the most recent price action, really this is in a range from what are we at?
2 years.
2 years. So we got a 2-year range. So we should be looking to short this. You know, if we're looking for trend traders on a daily time frame, we should be looking to go short and only short at this particular point. Dollar yen, you should only look to go long. Gold, you should only look to go long. Any index, you should only look to go long. This is really sort of I suppose kind of like categorizing the anatomy of these currency pairs and actually putting them into a basket of how they normally react to how we want to interact with the market.
It's the essence of the way I do my analysis. You know,
yeah.
Every week I do analysis that consists of about 4 different things. One is if I've got a game changer bar, which some may or may not relate to. Hi Moses, how you doing? Thanks for saying hi, and thanks for your compliment. I look at structure, which to me is those ranges that we've just pointed out. If we're at the top of one of those, guess what I'm looking to do? It ain't buy. If I'm at the bottom of those, look at what I'm doing. It doesn't necessarily give me a trade, but it certainly gives me a directional bias.
Yeah. Yeah, I mean that is really sort of price action 101, isn't it? It's really simple way of looking at charts is don't look at the actual bars, but look at the anatomy of the general moves of that particular currency pair. Look at how it tends to interact with itself.
What on earth is happening to the pound versus the dollar? We're 29 minutes into the session. It's going sideways. Why? What's going on?
Well, we've had some data from. Oh well, I'll tell you. In my opinion, mate, what's going on is that there's nothing to trade today. There's no volatility that likely today.
And, I mean that's another thing. Once I see that, If there's a pair that's going to move early in London session, this is going to be that pair.
Yeah, yeah,
And it just isn't. And that's telling me
yeah.
everything I need to know.
Yeah, it won't move. It's unlikely to move today. We had a big move on Friday after the retail sales numbers, but this week, if anybody sort of, intraday trading, I think you could potentially trade the CAD tomorrow, but I would avoid that because of the BOC rate decision on Wednesday. So Wednesday, I think we're going to get some movement. Before that, I think it's pretty unlikely.
Lewis is our oil expert, and he wants to have a look at WTI. Why don't we do
Yeah,
that?
I've got a long on oil.
Here we go. Oh,
Yeah,
expand,
I've taken a long
on all these lines.
On oil
You are long?
this. Yes, I am long.
Okay.
And Lewis, if you oh, good. Sorry, mate. I've just seen you're short. Okay, you're short. That's cool. That's cool, mate. I've only just gone long, to be fair, and I'm long off this level. Because it's the same principle as we were just talking about. If you kind of look at a longer term kind of position of WTI, right back from look at that. I mean, we're basically on a support level. So yeah. And a support level that there's been in existence since.
There's one there. That they're everywhere.
We're in and around, right? We're in and around. And if you now go to your market watch window. Now, rather than where are you? What is it? Is it XTI on that?
Yes.
XTI. So if you go down to the XTI and right click on it. And then go to specification and scroll down until you can see. Oh gosh, they charge you. Oh, that's not good.
Oh, yes, short they are big time.
Yeah, they're charging for shorts. Okay. And now this is the benefit. I'm just going to nick the screen really briefly, mate.
Go for it, mate.
This is the benefit of of having different brokers, if you like. So look at what Axie do. If you go to now, not WTI, the futures market is different, but if you go to US oil, which is the same thing, and you go to specifications, and you go here, look at the swap long. They're paying 10.
Wow.
Yeah. So why wouldn't you just buy on support? Yeah. so that's the reason I've bought it, mate. I've just sort of like I figure, well, why not just get paid on the swap?
That's a very, very interesting look at that. I
had
no idea that was such.
And I haven't gone in heavy. I've gone in really, really light, just so I can pretty much cover the whole market and just stay in it forever. get myself like a few cents a day,
Things like CAD Swiss and Aussie Swiss, and when they line up for a buy, it's really, really nice.
Yeah. Well, this is it, and this is the reason,
I've got to say.
No, well, this is the reason. Like, if we sort of like, sorry, I gave you the screen back, but I'll just take it back one more time. If we were to sort of look at the dollar yen as an example, and we have a look at the specifications on this at this current time, and it will change over time, but it's paying 14. It's paying 14 in points. So, if you were just looking at this on a technical support and resistance line, then the way that I would interact with it really is over a long period of time is that if it comes up and it comes down and it bounces, this is a buy zone. It's the same with WTI. This is a buy zone. So you just want to buy it effectively. You can have stops as wide as you like, because when it comes up, now this is another buy zone here, and this became a buy zone here. So rather than worrying about the technical setup, this one is, as I quite, we were saying earlier on, this one tends to trend to the upside. It tends to go that way. When it comes down hard. Now, this is obviously a pretty brutal period, and that's really from 2002 right the way down to 2008. But ever since the financial crisis, this one has just been going up. So it's been going up for nearly 20 years. It's been going up for 15 years now. So it's been going in this direction. But you can just get paid on the swaps. You don't have to do anything. If you can get in low enough and don't trade it effectively, then you can get paid on the swaps and build your position. Now, of course, two ways. Another way to do it is putting on two positions, and every time it goes up, you take profit. Every time it comes down, you add the position, and just keep doing it that way. But looking at these markets and just seeing what their general movement is not a bad way to just sort of maybe get paid on the back end and get paid some swaps from companies that tend to take the money from you. WTI, you look at WTI, this is pretty rangy, really, but are we in a sort of like a sell area, which is up here on the longer term I'm talking about, or are we in a buy area? And I would suggest that right now we're in a midpoint, if you like, but we are basically using this has become support ever since it was rejected as resistance in 2017. It's become support for the last 5 years. So this is a buy zone. The next buy zone is probably down here. The next, a longer term sort of like buy zone is probably down here. So not to say that we'll hold it for up here, but this is a rangy kind of pair. This is a rangy instrument. So range bound traders, really, we should be looking to push to the next range. And it's the same as I said with gold and silver. Maybe not so much silver, but look at gold. I mean, gold is if you're a trend trader, surely this is an absolute dream for you.
Yep.
So and it's the same as I said. If you look at indices, these things are the same. This is the that's the Japanese Nikkei. That's the CAC. That's the Aussie 200. All indices are the same. They all tend to trend to the upside. Key support at 68. Yeah, definitely, Lewis. Sorry, mate, to cut you off there.
Who, me? No drama
Yeah.
at all. Well, we must be nearly ready for George. You got George ready?
Yeah, no, I haven't.
Okay,
but I will get him ready.
While you're doing that, get ready, George. Stand by.
Yeah.
While you're doing that, I'll just have a quick look at what's going on here with me, and then we'll go to George to finish the show off, guys. Ash and I will be leaving very shortly, and George will
He's
come
ready
in.
to go,
If
mate.
you got any questions for either of us around what we're trying to do with these 1 minute charts or anything else, please feel free to do that in the next minute or so. I'm looking at euro dollar, but the reason I look at euro dollar every London session is because I'm looking for the edge that exists with euro dollar in my world. That is a daily pivot test, and you can see it's tested the daily pivots, tested the daily pivots, tested the daily pivots, tested the daily pivot, and once again it's tested the daily pivot, but no setup there for me today. So the edge is now gone. But if you ever want to do that as an exercise, it doesn't matter if it's euro, dollar, or anything else. It's a very, very simple thing to do. Go to your 4-hour chart and count how many times the daily pivot is tested versus how many times the daily pivot is not tested, or the weekly pivot, or the top of a Bollinger Band, or support and resistance. Just count how many times that happens within, let's say, a month, and you can therefore get a percentage on that. So if it's tested here 15 times out of 20, you know straight away that you've got a 75% chance of that happening certainly in that month. If you go back 1 year and it continues to be the same number, 5 years and it continues to be the same number, guess what? You've just got yourself another system that you can rely upon. And that's I did that exercise many years ago, and that's why I always look at euro dollar, because I know that that number is constant, no matter how far you go back. Of course, there are circumstances that will change the probability of you getting a trade on that. It depends on whether you're awake. It depends on lots of different things. Time of day is one of those things. Anyway, I just thought I'd share that with you. Pound versus the US dollar. Where is it? At entry, basically. Look, under normal circumstances, I'd just close this and go and spend money somewhere else. But for the sake of the exercise, I'll keep it in the market to hit our target or our stop loss. But under normal circumstances, we got into this, what, 25 minutes ago? And we're trading a minute chart. Really, I'll get out of here and do something else, really. That's how quiet the market is today from my point of view. And do I want to trade small time frames in this market? Answer, no, I don't. So that is me. As I said, I think my favorite way this week, don't have a setup, but my favorite way this week is dollar Swiss long. Would like to see a pullback. You got one?
Cool. Well, the one I'm really looking at is the Kiwi yen, obviously, is a short. But I actually quite like the Aussie dollar short as well, but from a much higher level.
Yeah, that's what I want. I want dollar Swiss to be a much lower level.
Yeah,
but I don't know that I'm going to get that. We'll see.
Yeah.
Gorgeous George.
Should we bring him in?
Your weights. I've lost you.
I should be here. Am I still there? You got George? You got George now. Let's make sure I got my sound on as well. Make sure we don't mess this up like I did last week.
Press play.
Are we in?
I can see. I can't hear.
Good day, traders. I trust you are well. Welcome to Trading Buddies. Thank you, Ash, and thank you, Jeff, for having me on the show.
Have a good week, guys.
And I'm going to have fun with you guys today. So what a week we have had. I trust that the insights into price action are assisting you traders to become more profitable. But I think more importantly, to enjoy the work that we do. If you do not enjoy trading, you're going to have a problem. But I'm sure with all the approaches that we are sharing with you, you are beginning to enjoy yourself. We have had this all-time high here, which was set up in September, in DAX 30. Now, I mean, look at this. Last week's action has changed the structure of the all-time high. But what I'm going to do, I am going to leave it through this month of October because it's still a key factor. We might come back into it. This might become just a failed breakout. So I'm not going to change it. Now, why would George think this might become a failed breakout? Have a look at it. Beautiful for the bulls. I mean, we were speaking about it last week. We talked about where you put your stop. You know, you said, well, I'm going to take a chance anyway. Bulls might break out above it, put my stop in place, manage my trade, you know. But now, if you're taking the trade, maybe your stop is here, and you're kind of holding on and seeing what happens. Good for the bulls, absolutely good. But look at the follow through. High test, bears controlled it. At that point, that was a failed breakout because we closed back within it. Then we had a dodgy bull attempt, tail on top. Good for the bulls in terms of this low test candle, but just in the week that unfolded last week, not enough to convince bulls that we might accelerate up. Now, if you are a bull, again, you got to make choices. So, you know, if you had to buy, if you say, George, I'm going to buy, what do you think I should do? Well, if you're going to buy, you're going to be buying above this candle. Might as well try and buy above that. That whole of last week is the structure that you're looking to buy off. The bull candle, bears at a beautiful candle failed to control it because bears, if they're strong, at least would have given us something like this and accelerated down. Bulls did control the wick. You know, we accelerated up and closed up above here. Weak structure. But if you're going to be buying, you got to be thinking, well, where would I put my stop? I would use a measured move stop, starting here. Like that. That's what I would do. Why? You got 5 days, 1, 2, 3, 4, 5 days of the week. Put a measure. I'm going to buy anyway. Use a measured move stop, buy above here. If you get a bull candle closing above that, then you can start to tighten your stop. That's buying pretty low probability, but you get rewarded for low probability. You kind of spoke about, I think, somewhere down here. If you're buying here, low probability, but you get rewarded than waiting to buy much later on. If you're buying down here, low probability, but you get rewarded than buying when things are beginning to move in the direction that everyone says, hey, the bulls have taken over. So that is the opportunity that you have. If you are a bear, would I be selling anyway? Not yet. But if we got a bear candle closing beneath that higher low, and the bears control the market, then you can start to say, okay, I'm going to sell. If I get a decent enough, let's say we got a big bear candle on Monday, I'm going to sell, use a measure move stop up here, and hopefully get acceleration. As it stands now, we might just continue to have sideways price action into the following week. Higher probability that we continue to go sideways. If the bulls are strong, they need to follow through, give us a trend candle. Then all the other bulls will hesitate and we'll have to jump in. I'll probably still be using the same kind of stop if I was jumping into that market. Brent crude, man, I mean, we're still stuck in this trading range. Bears are controlling the bodies, but we don't have anything decisive for us to do it. I mean, if you want to trade in the middle of nowhere on the daily chart, if you're going to sell, your stop is way up here. If you're going to buy, wait for a bull candle, your stop is going to be somewhere down here. Best on the daily chart, just wait and see what happens. You know, if we get a strong bear candle, which simply means a bear candle can have a tail on top, body, but closing beneath its low, small tails, that would be fantastic. But then you don't want to sell into this low that we've had, this low that the market has respected. There's a low of September here. So, you know, the case for the bears is pretty weak unless they allow the bulls to come up and then they give us a 2-bar reversal, and then we have a lower high, a little bit higher up, decent enough reversal. That gives you enough case to jump in and sell. So that's my thoughts on that. Silver, my goodness, what a bullet. Sometimes I laugh, you know, when I see these things, not kind of, well, you know, I'm going to take a chance, George, and just buy, and where do I put my stop? Because I might just get the bulls doing that. And the bulls did that. You know, so if you had decided to buy anywhere in here with a wide stop down here or even a measured move stop, if you get that reward, you gotta tighten your stop. If you didn't do anything because we're just going sideways on the daily chart, perfectly fine. You missed nothing. There was absolutely nothing that you say, well, man, I should have traded above that or that. There definitely isn't anything. No setup here. So good for the bulls. Now, bulls have smashed through the high of September. So bulls are going to be thinking, hang on, I mean, this was pretty strong. At the very least, bulls are thinking of, if I just look at the measured move of breaking out above the high, you know, the high that we had, this point, George shifted this. The high of September was here. Okay. If we just measure that measured move, there is a potential. So if you are a bull and you want to take this on the assumption that the measured move are breaking out above the high of September, there will be at least a follow through. You put in your order above here. At the very least, your stop is here, because you're saying, well, we might get up to there and get a little bit more acceleration. So if you buy on the daily with the stop up here, it looks wide, but that's the proper place to put the stop. If we get triggered in and it's a bull candle, then you can legitimately tighten your stop. This is what I would do. I would look at that measured move of that trend candle, and that's just, you know, smack bang within the high of September. If I take a trade and we close anywhere on the daily above that, you can move your stop up from wherever it is to 50% of that breakout candle. And then depending if we have follow through on the next day, you could put a stop here. If we get a decent enough trend candle, you could even have a more aggressive stop. But understand, if you tighten your stop very aggressively, very quickly, you can get stopped out and it begins to go up. So that is probably the most aggressive rationale for taking a trade. Alternatively, you could say, I'm going to look, rather not aggressive, most rational choice of the English language. Alternatively, look at the full breakout and you say, okay, I'm not in a rush. I've kind of seen what the bulls have done. This is strong enough. The bulls have the chance to go up over a period of time. I'm not looking at the quickest move, just which is that breakout. Say there's enough momentum based on that breakout to get to that measure move that we have. I'm gonna, so I'm not gonna try and scalp this out on the daily, etc. I'm gonna hold on to this as long as possible. So I'm looking at this breakout. I'm gonna take this trade, put my stop here, manage it progressively, and I am anticipating that the bulls will get there. They may get there in a couple of days, or we might go sideways, but ultimately they will get there. So there are targets to go for if you're gonna buy above this. If you are a bear, what you're gonna do nothing until this fails. You know, it might fail in one day, a couple of days, and we break beneath here, get structures to trade, and then we sell. So that's my thoughts on that beautiful trade. If you've been in, great opportunity if you're not in to jump into the market. Euro yen, we are still going sideways at this level. So there's not much to do here. Now, I'm not a fan of putting orders above a trading range and a stop down. I want to wait to see these things actually break out, and I can decide, okay, I'm taking a breakout above a trading range. I know where to put my stop, or I'm going to wait for breakout pullback. If the bulls break out, the bears, same case. The way we're going now, anyone who breaks out with a decent uptrend candle, you can take a breakout trade if you want, or wait for a breakout pullback, either way. So fantastic opportunity to keep your eyes on it. Do not ignore it, because you might get rewarded. You might get rewarded. When this is happening like this, it's absolutely fantastic. On any time frame, something is about to happen. Let's wait for it. Cable. Big bear candle that kind of, you know, if you're wondering if you're a bear at that point, you thought, oh, the bears are strong, you know, they should get down here. But you've kind of gone sideways, but you've trickled down. That is interesting, isn't it? We're going sideways, but the bears are still controlling the market because we are selling off, not giving much opportunity to sell, you know, like we were talking earlier on, because you can't just sell into this. You know, you cannot ignore that. Big bull breakout, pull back, very weak. It's a pullback, very weak for the bears because they failed to accelerate down. Good for the bulls. So bulls are going to be defending this. These bulls that broke out above here defended well. They're going to be out here defending, hoping the market accelerates up. So at this stage on a daily chart, nothing much to do for anyone. I mean, if we get a decent enough trend candle, you know, for the bulls, then you can look to buy, decide where to put your stop down here. If the bears come in and, you know, we keep going sideways, or they could just do this and frustrate us and keep going down. But if they give us trend candles, follow through, then we can decide to trade breakouts or breakout pullbacks. I trust you had a fantastic day right through the open from Jeff and Ash. And